Hello, this is Martin from Secrets, the channel for learning about trading and investing. Welcome to the daily stock market analysis show where we look at what happened in the market during the day and then try to learn something from it and plan for a better trade for the next day. So this is analysis for tomorrow, September 28th, Wednesday 2022. What kind of market summary is that? It was a volatile Nifty that we saw. Let's get into the details by looking at the charts, the daily charts for the Nifty that you're seeing here. Yes, we have a flat day, very flatly, 9 points lost, that's all. Banknifty, look at this, it lost more than half a percent, like 257 points lost, right? Clear, down move can be seen on the Banknifty. And what else? Right, it's two. So the numbers, that's what you lost. But the interesting thing was the intraday. Look at Nifty's intraday, 5-minute charts that you're seeing. It is very volatile basically, right? Look at this, gap up 1%, then 1.5% down, 1.3% or something, and then 1% gain, then again 1% down. So it was multiple V shape, V, 4 V shape in a day. The toughest day to trade. That's what happens when the VIX is about 20. But Banknifty, it was a gap up, one V shape, and then it was smaller V shapes, but it was trending down move. That's what happened in trading. Coming to the daily charts again, you can see that there is a M pattern breakdown on the top that has happened. Now another multiple M patterns may be there, if you look at a large number of days. In the Bank Nifty we're talking about, but Nifty also there is an M pattern. Neckline for that is breached, and then now it's a downfall that's happening. Right? M pattern double top 2 times, try to hit and break out of this zone. Normally moves to the height of the width of the M. That much of movement is to be expected if it works out. So it's no guarantee that it moves that much, but it is clear indication of bearishness that you see from the M pattern. So that's it for weekly candles that we are talking about. Week was not entered, but still if you look at, we can clearly see that's it. That's the 6% of Nifty and the 9% of the Bank Nifty. Clear downtrend facing the resistance on the rounding pattern on Bank Nifty. So that is still there. We are not talking about weekly analysis, but because week is set to end. But daily it is bearishness. And what else? Levels, make a note. 17,292 on the upside for the Nifty. Resistance first. 17,500 is another previous swing high resistance. 17,292 is the gap actually. Downside, Nifty has a support at 16,948. That support is actually breached today, right? But it managed to close above that, right? So we can still consider that as a support. And after, if that is breached, then you have 650-952. That zone, that's a support. Right, it's a gap support plus a previous swing low. So that's Nifty. Well, the Bank Nifty 39413 resistance, gap resistance on the upside because of the gap down yesterday. 39 today. Basically 39759 is the next resistance on the upside. Downside 37951 previous swing low and 37250 previous swing low down. This is right. First resistance will be here. It's a gap resistance that we have, right? And then we have this swing high, and this swing high. All resistance on the upside. Downside, this previous swing low, and then another previous swing low, and then there is a gap, which is near to 37,000 nearby levels. So remember, we have still not reached the 38,000. Today also we are holding that. So the 37,951 is going to be good support. So 37,000 nearby will be a good support. Any breach of that only you have to worry. Nifty 17K, it was trying to protect, or they breached multiple. It went down to 942 kind of levels, taking all the gap supports. But still it's just trying to hold and close up. Managed to close about the 17,000. So there's something about this 17,000. There is some consolidation that's probably trying to do. It's not ready to break down that and then go further down like Banknifty was going. It is not doing that. And that's it. So momentum, look at this. Both Nifty and the Bank Nifty momentum is in the bearish zones now. Both Nifty is holding on that. Trend is crossed out to the bearish zones and with rising strength on both. So that's negative. Momentum is negative. Trend is negative. Volatility bands. We saw that yesterday. It's having a bearish bias. It's having a bearish bias. Definite bearish bias. Some outside price expansion is happening. Bank Nifty also, the expansion has not started. Here it is still managed. It's not showing any clear indication of an expansion. Downside bearish bias is there, of course, because 20 DMA is gone. But Nifty clearly showing that downside expansion, and bearishness is what indicates. Bands indicate that. Momentum indicate bearishness. Trend also is going negative. Price patterns obviously negative. Now CIP bounce cannot be ruled out because these are all previous supports, resistance zones, which is where now the support is taken. So there could be a CIP bounce, changing volatility bounce. Possibility is there. Right? Cannot roll out that. But otherwise, all major price patterns are all showing bearishness, just like momentum trend and volatility bands. Small cool off has happened today, 1.5, but well above 20, and you have to be extremely cautious. It's possible to stay out of the trade if you are into options and derivatives and novice, which is why it's a long build up that happened. So that's what I said. 17K was giving some kind of build was happening around that for the expiry, monthly expiry probably because of that. So after the monthly expiry, probably it may break or something, some kind of play from the option is happening on that side. Short build up, obviously, what happened in Bank Nifty. Options higher levels are still very wide range. 16,000 to 18,000 is the range where the highest potent power writing is seen. 38,000 and 41,000 is the range where the September 29 monthly expiry levels are written right now. Highest potent calls in the Bank Nifty. 0.57 and 0.51 put call ratio in the Nifty and the Bank Nifty is not bullish at all. It's very close to the bearish zones. Sectoral performance to if you see IT pharma and FMCG performs less than 1%, metal auto gave up more than less than 0.5%, rest are all flat. Auto reality is in the bear zones actually. Auto is one of the leading sector now in the daily short-term momentum perspective. It's in the bearish zones, and all others are maintaining the sideways momentum from the daily charts. All of the major sectors that we are talking about, right? And heavyweights. Infi, TCS, IT stocks performed today. Reliance also performed today less than 1%, but while others that underperformed, others all underperformed 1 to 1.5%. All of these is in the bear zones except ICICI Bank. It's only one that is maintaining the sideways zones. Right? Institutions selling again, the sad story of institutions selling 2,600, 800 crores of selling has happened today. DIs are balancing 3,500 buying. Yesterday also they were buying equal amount of that. So DIs are giving full support to keep the market stay afloat. So that's why we are cracking down basically. So there is good buying that happened in the IT stocks. Good buying happened in the Reliance also, right? So Fyers are selling is a worry regardless. Crude oil is rising flat. It's less than 78, which is a good thing. And oil is crazy levels of 20-year, multi-year high and shooting up 113.8 kind of levels. USD INR also all-time high, 81.5 kind of levels. Right, these levels are the concern, right? Macroeconomic concern. All the currencies across the world are cracking today. There was some pullback in the Asian currencies in the global markets. And there was some pullback happened, but it's a global poor global markets performance is what you see across. Gold is rising, but it's breached the major support zone and it's at a bearish momentum and then trying to consolidate. SGX is red flat as it now used indices a red caution. 20% of correction is already done. Today there is some recovery and green is seen, but it has already breached the major concern. It's at a actually it has breached a major trendline channel and it's at a support zone. So any moment it breaches the 29K, it means that we have far down to go on the Dow Jones. Same is the case with other indices also. It's at a major support zone. Major trend line has got breached, and then if this is not able to bounce back up from here, then it may be a bigger falls that can happen. 5 or 10% of kind of falls can happen, and then if they are very sharp and they're going to extend for a long period of time, then our markets also would likewise get impacted, and then big falls can be seen. Major events is a Thursday monthly expiry is there. It's supposed to be very volatile, and RBI event is there Friday after the expiry. So this week is going to be highly volatile because of these reasons primarily. Two stock picks: Intellect Design is an IT company. It's a short, and MCX is a metal commodity exchange, multi-commodity exchange. It's also giving short signals. MCX, let's see, bearish calls for the short trade opportunities, and this is what the charts are saying. The patterns are coming on the monthly, interestingly. Right? It's a head and shoulder monthly breakdown that is possible. Can go good swing opportunities at this 815, 640 kind of levels on the downside. So if it works out, but it's a monthly, is a very long time. Daily also is cracking, the bearishness there. On the daily and weekly also, its bearishness is there. So basically, there's the trend line. If you watch and it reaches that, it can give you good short opportunities. Intellect Design also is showing a rectangular pattern breakdown that has been, it was consolidating for a long time and seems to have broken down that. Now the support could be very far away at 322 kind of level. So good swing opportunities can be there. Trend and the momentum both indicators clearly showing there is bearishness, right? Just to wrap up, there is not much change from yesterday. The view remains bearish, moderate bearish, you can say. Reasons, obviously, the price patterns, momentum, trend, put correlation, weeks, FI, selling, all of this, use markets, rupee week, all of this indicate why the VIX is about 21.5. Obviously, market has got a lot of uncertainties. So you have to be cautious, it will be highly volatile. Markets can crash down. There are big moves happening. Market is basically falling prey to the global cues. So we had a crackdown of nearly 9% in Banknifty and nearly 7% from the top. That has happened in just 3 weeks, 2 or 3 weeks. That's all on account of global cues. And now it's at a crucial point of whether it can maintain that 70k kind of nearby levels, or is it going to give it up or not, is the question, right? All price patterns, everything is against. So let's look forward and see what happens this week. Stay away from the trade if you're in the options, and if you're not an expert trader, that's the wisest trade that you can do, right? Because it's going to be a monthly expiry, heavy volatile. VIX is about 21.5, means you may not be able to manage the positions when such quick moves of big stop losses get can trigger that, right? So this week is going to highly volatile. Stay out of this is the best strategy to take. Well, but if you already have positions, make sure they're hedged overnight, because overnight risk is always that can wipe out your capital. Big crash can wipe out the entire capital in a pre-market itself. So stay cautious and play safe. If you are having quality stocks which are losing, then hedge them with option strategies, and they're discussed in our playlist. Right? Cash secured put and covered calls and all that, they're mentioned in the playlist, and watch all those videos and then try to apply them to hedge and benefit, get rental income while the market is moving down. And also for investment, build up of SIP mode. Option strategies can be used for investment as well. Right, that's a view. Bearish view for the next day. High volatility is anticipated. That's my view. And if that helps you to frame your trade plan in some way, and helps you to understand the different parameters based on which we have concluded the market view, then consider hitting the like button. And if you're not shared, please share it. If you're not subscribed, please subscribe right away. Thank you so much, and happy trading, happy learning. Bye bye.